Tough day for the markets. Look at that. All three major averages down more than 1% right now. Let's bring in our panel. We've got our very own Jolene Kent. We've got Jack Otter from Barron's and James Frischling from New Oak. What do you make of this market, James?
You know, Tepper's a pretty big guy, and he speaks his mind, and I actually say I don't think he talks his book. So when he actually calls for...
You don't think he talks his book? I think that's what a lot of folks out there might be saying, is that he knew this, he prepped for it, he said it, he watched the market, he's profiting.
And I'll say he doesn't care. And what I really mean by that is there is a time to make money, there is a time to protect yourself. Markets at all-time highs. Fed has thrown everything they can, including the kitchen sink at this. How much higher do you think it's going to go? So I think he's telling people, take a little money off.
We've been saying what you just said. I mean, that makes a lot of sense. We've been saying it for a while. Why now? What's the tipping point, Jack?
Well, we've been seeing this already in the market. Small caps are actually in a correction. They're down 11%. There's been this flight to safety. All the glamour stocks, the Teslas, the Groupons have been hammered. So I think it's no surprise that now even, the risk on trade is off.
Yeah.
It's now risk off, and so even the big stocks are
Joe, he makes a great point. Everybody's been saying the Russell is the canary in the coal mine. It is now officially in correction territory, down 10% from its high.
Well, this morning we've been watching since the markets opened Dow Chemical too. Another sector to watch. Chemicals are rarely down. They were down this morning. We were talking to a couple of analysts about this, and you see they're down about 3.4% right now, and it's similar to the theme that these guys are talking about here.
Yeah. All right, and the wage rage hits the international stage. Fast food workers striking in 150 cities across the U.S. today. Protests in more than 30 countries around the world taking place in support. What do you think about this one?
I think that this is just an example of the unrest that was kind of inevitable. I mean, I'm a huge Tepper fan. A buddy of mine is a trader, said he hates to trade against Tepper.
Right.
But his salary, his income, is representative of pain that we're seeing people kind of lash out against.
What does Tepper have to do with it?
26 guys, one of them being David Tepper, make more money than all of the kindergarten teachers in this country combined. At some point, you're going to see...
What do those two metrics have to do with each other at all?
Because fast food workers are just lashing out and saying, pay me more. I think they're not getting paid a lot. And they're seeing people who are getting paid enormous sums of money, getting taxed to 15%, and now they're saying, me too, I want a piece of this pie. I'm not saying it's logical.
Really? Because they're on par with David Tepper in terms of what they know, what they can do, the jobs they can create, the money they can make?
They're lashing out at what they see as inequality. Again, I'm not saying it's logical, but I think that's the force that you're seeing out there.
Real quick.
The goal is admirable, but is unrealistic. It will cost jobs. It won't happen. You're also attacking companies that employ so many millions of people, and you're hitting franchisees. You're not hitting the companies with these moves.
That's a great point. We're going to hear from one of the people fighting for $15 an hour. That is coming up later in the show. All right, meanwhile, protests could not stop the FCC from moving forward on net internet regulations. This could be a game changer for both Silicon Alley and for the internet service providers like Comcast and Verizon. How is this going to affect the consumer at home, Joe?
It's very possible if the FCC does get a rule approved, which it has not. If it gets approved after this entire comment period, it could definitely hit consumer wallets very hard. It also depends on what types of companies decide to take a fast lane.
What's really happening here? Is the government saying they're going to get involved and they're going to try and regulate who can go faster or slower? I mean, break it down for people. What does it mean?
Well, basically, the FCC has voted to propose rules that might allow for a fast lane. And so then after the rule is proposed, there's a 100-something day comment period in which people, including the companies, can weigh in on this, at which point then they go back and they rejigger the rule.
Okay. According to Pew Research, and this story really got my attention, the median net worth of college graduates under 40 is merely $8,700. So they're nearing 40. If they put together, they do a P&L for themselves, they come out, they're worth about $8,000, $9,000.
And that's partly because the liability side. They've got these loans counting against that. Yeah, student debt, exactly. It is rough. I mean, the only thing you can say is, though, at least they've got that degree. Because if they didn't have that degree, they'd be even worse off.
I don't know. I mean, if you look at it, it's a fraction of the $64,700 the same age group is worth without college loans. That's college debt without college debt. Look at that. Go ahead.
If they run this study 15 years from now, it'll be even worse. The cost of tuition at colleges is soaring. The student loan market is something we think is going to be the next big mess.
Right.
You have a generation coming out that's indebted. You have housing standards that are tighter. This can't buy a home. You're creating an indebted generation. It's going to get a bigger mess if they don't address it.
The problem is we sold this story that a college degree was your ticket to success, any college degree. So people went out and they got a very expensive education at colleges that maybe weren't worth it, with degrees where you maybe couldn't find a job. job and went into great debt. We're not saying that it doesn't pay to go to college and that you shouldn't spend money on it. You just have to be a smart shopper. Don't pay for the really expensive private school where no one's getting a job afterwards, right, Joe?
Exactly. That's where the catch-22 is, because Pew also has done the research and said over the long term, if you do have a college degree, you earn $57,000 a year versus $32,000 without one. So there is a payoff. The issue now is the
just
cost.
Be a smart shopper.
Exactly. Selecting where you go and where you can afford it.
Yeah,
and align how much you spend with what you expect to do. You know, if you're an econ major who's top of your class, you may very well go into a business where the loan's not that big a deal. If you're the old kindergarten teacher, though, don't spend so much on education.
Kindergarten teacher. That got you in trouble at the beginning
I've got
of the show.
a baby. What can I say?
Ease off that. NFL player
I'm
Michael
not letting
Sam
it go.
has another. I respect that. Has another thing to add to his resume. TV star, the Oprah's network own, will produce a documentary series about his journey through training camp. Very interesting. What do you think of this one, Jim?
I love that Michael Sam's jersey was the second hottest selling rookie jersey, only behind Johnny Manziel. And maybe I'm the bad guy. I don't like the documentary. Go play football. Go play and be great.
I think it's a big distraction here at the beginning, the very beginning of your professional career. The first thing you're going to do is have cameras follow you around.
And the resentment that could build up in the locker room. Yeah, I think that's a bad decision.
He's supposed to be focusing on his main job. I mean, I can hear coaches saying, why don't you focus on your day job and worry about your TV job a little bit later down the line?
Well, that's certainly the case. You know, on my first day here, you never would want to bring a whole load of cameras in anywhere, right? You're still finding the bathroom. Where's the hallway that you're supposed to find the studio? You know, like all of this
Where's
stuff.
the water? Yeah, exactly. Yeah. All right. Thanks, guys. Don't move. We want to bring in the rest of the panel. Jim Frischling is back along with United advisor Scott Martin. Chapwood, I'll start with you.
I think it's something to be concerned about. Now, one thing that David Tepper did say is he's not short this market either. So he's kind of just on the sidelines saying to worry, but don't kind of go against it. Charlie brought up a really important point, though, Melissa. If you take away the Fed support that we have here in the U.S., if you take away all the central bank efforts, Japan comes to mind, around the world, then you might see this market fall faster than, say, Johnny Manziel did in the NFL draft last week, because that's really what's going on here. All the central bank intervention is keeping that risk appetite for investors high because nobody wants to buy bonds with rates so low.
Jared, what's your reaction?
Well, first of all, that's happening around the world. Scott brings up a good point. You know, central bank intervention is happening around the world. And by the way, deflation is a near-term effect. Why? Because there's nobody to buy goods. I mean, you look at China's slowing economy, you look at our slowing economy, and Japan, by the way, I think is a bigger risk. Real quick, this is important. I don't think Tepper is the cause of today's pullback, and I respect his opinion. I respect him as an investor. He's obviously brilliant. But if you look, for instance, from 1997 almost to 2000, I was taking some notes here, to 2000, yeah, almost like 13 years of just complete constant growth in the markets. I'm talking about appreciation without a major pullback. We've only had two greater than 20% pullbacks in that time. And by the way, in our last recovery, which has been over the past 5 years, we've had two 15% corrections. So what I'm saying is this, real short. You know what? I think we all know this. We all know that we're in times of a heady market. I think we see a little bit of a pullback. I think 5 to 10%, but I don't see a big correction.
Jim.
Housing's weaker. Job market fairly benign. GDP weak. So I actually think the economy is not keeping up with these markets. So Tepper, I think he's actually just kind of realizing, and Charlie said it, the Fed, this has been a Fed-fueled rally. The economy's not keeping up. I think a little money off the table is not a bad thing.
Yeah. Charlie, what's next there?
Well, believe it or not, I'm going to dinner with Francis Ford Coppola tonight. So
that is important.
And I'm going to find out why he cast his daughter in number 3.
Right.
And you know, listen, now there's just a bunch of panel discussions. I think Valerie Jarrett's speaking at some point, the presidential advisor, and I'll report back.
Real quick, Scott Martin, are you selling this market today?
I'm not. I would actually, if I had cash on the sidelines, most of our money is in, I would be buying.
Okay. All right, guys, thank you so much.